1255. You can see the Dow is down right here. It's down 162 points coming off the lows. NASDAQ 100 had a big haircut. It's coming off the low. So is the NASDAQ itself and the NASDAQ 100. S&P 500 hit a 50-day moving average. But what we're going to show here now is the VIX. We came down and tested this. So when the VIX had rallied, stocks had sold off. But look at the last rally. 1 day, 2 day, 3 day. But look, 1, 2, 3, 4, 5, 6, 7, 8. We went down 8 days in the VIX and made the bottom. That's when we had that 9-day rally to the jobs report on Friday. Today is 7-11. Alcoa is going to start the earnings. We're very complacent down here at very low levels where there's a less amount of fear. Always happens in bull rallies. So basically what we're seeing today is that there's some fear coming in, and we're still very complacent in the overall market. And the earnings season is kicking off with Alcoa here shortly. I can tell you right now that we'll be monitoring, and the VIX is just related to the S&P 500 right here. And it's a fear indicator. When it's at its all-time lows, there's very little fear and very high complacency orders. And markets are generally extremely, in the shorter cycle, short-term cycle, they're overbought. And they have to have a correction. Then after the correction, we'll see how they set up. But it's going to be even more volatile because of the quarterly earnings this week and for the next several weeks. We will be monitoring the daily fear level. Okay? That's the daily level. On a 3-minute level, which is right here, we'll be monitoring how it gapped up today. When stocks gapped down, the fear gapped up, it ran up, it made its highs. It's right back up at these highs right here, right now. And it's staying elevated going into the close. So on an intraday level, when this is breaking out higher, you're short equities. When this is breaking down, that's when equities are coming off their lows. When you start to break and go this way, well, then equities are weak and selling down. When this goes down like that, equities got a little bit of footing and were ticking up a little bit, but then they fell and you break higher and equities sell off again. And we're coming off the lows of the Dow Jones right now. People are short covering ahead. This is called the VIX. It's a fear indicator. It's a lagging indicator. But during an intraday level, when that's breaking out, bear funds are breaking out. When that's breaking down, then the bear funds will be pulling back. And when they break out higher, then the bear funds go higher as well. And there was a big put-to-call ratio imbalance in these markets. Calls were inflated, puts were deflated. When we put the low in the markets, it was quite the opposite, because it was. The put-to-call ratio suggested we had a short-term bottom, and that would burn up off of the bottom. So what? It was a great trade. Now we're overbought, where the risk-reward ratio is limited to the upside because of the amount of overbought on the weekly. Individual equity names got totally overbought, and they're having their correction. Sign is down $8, a whole bunch of them that we cover, and everything we do here is live. Once again, this is Trombone and Hard, and it's up at the highs, it's elevated going into the close. Welcome, 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 MMTs. Learn how to use the VIX and apply it to your trade management, and you guys do extremely well. You have been taught so well on it.